let's start with a couple of the daily charts here. I'm going to expand this a little bit so that we can begin to see it. Now this is live of Apple 10-minute chart, so we have that one going, but let's move on and take a look first at our dailies. I want to set some of these charts up so that everybody can see them. And then, because I think it's important, I mean, while we're talking about the intraday charts, we have to also look at the broader view. Because it's like last week when I was very strong on my, pro-Apple. We were pro a lot of different things, including the S&P, because we were expecting a mid-sized move at the start of the week. Well, as the week went on, it became clear when we ended up with a red dot short signal the other day, and then it was followed by a gray dot that, well, in fact, things may not be as, optimistically rosy as, we started out. So it's always important to do this up-down review. Forgive me, it's a little early in the morning still here, and so having my coffee as I go along. But let's take a look at this Apple daily chart, and Apple's just been relatively ugly. And let me shrink this down a little bit so you can get a broader perspective of just how bad. And this is the whole point of creating my red trend versus green trend, so that you can get a little bit clearer idea of what that trend model can do. And even if I shrink it further, and let's zoom in a little here, you can see how, we're able to capture the upside movement, but then it turns red, and, even within that we end up getting our bifractals, but it becomes important to see those within the context of our shakeout indicator, and the reason I call it a shakeout indicator is simply that, because it's going to let you know where real buyers are either hanging out or institutional guys have bought into a setup. And the criteria for it is usually about a negative 12.5 is a point where you've seen significant distribution in the form of your larger institutions. And it varies by stock, but not a whole lot from that general guideline. Let me change the color on this line that I put on the shakeout. Yellow stands out. Or actually, let's do white, because yellow is the color of the overall line. And you can see that currently, Apple's at negative 25 on a daily. That just means it's just been huge distribution from the stock and not really improving any. And let me slide it down. You can get the shakeout right down here at the bottom. And so you can see it right there at minus 25. And we had a nice improvement when we were looking for this up pop at the gray dot, and we were looking for a second move lower. And then when we started to get the green dot on the much lighter, we started to get several bifractals. And typically when they come in this situation after you've been beaten down this far, particularly since we knew from our extreme histogram, if I slide down here, and I normally have this overpriced, so I'm just going to go ahead and do that real quick, and I'll show you how on TradeStation we can do that. We're just going to put it on the overpriced, but we're not going to have it affect price, so it's going to be independent of price because it's its own reading. And there we have it. And the important part is that we see that we dip below the red lines, and that usually calls for us to retrace those lows. So what I look for when we saw these bifractals is, okay, yeah, I expect them to just let price fall under its own weight before they do any kind of attempted pop-up. But a situation like this where you've dipped down this far, you have weeks of hashing out before it's going to improve. We're finally getting towards the mid-late stage of that. Unfortunately, you're still at minus 25, so there's been no resolution for Apple. We saw this after the flash crash on the market in general, and I told people at that time it was going to take months for it to work out because it was such a deep move into the overall, well, we can always take a look at it, but it was negative mid-40s on the overall market. Now that's a huge level that you have to just clear out, in the sense that people are going to jump back in, they're going to test overhead resistance, price is going to fall back, and this is what we begin to see in the indicators that we're looking at. And it's tiny little fractions of trades that are done in a specific sequence that can be seen, and at that point you know who the individual is. Sort of like tagging someone with a little, GPS. Think of it that way. And when you get a large enough collection of these little teeny GPS tags and they're all moving in the same direction, then you get an idea of what a dot is. So, I mean, that's probably the easiest way to explain it. I mean, if you had, 1,000 cars with GPS on it, but you want to know if are they all going the same direction or are they all going different directions. And then as soon as you start seeing them all starting to get in line, well, then you have a clue. If you don't see them in line, well, there's more of a problem. And in this particular case, with that negative 25 on the shakeout, you get an idea that in Apple, no, there's not a clear consensus as to which direction things should go. So let's flip back to the 10 minute and see where that one is currently. Ended up with our green, and I love this because in green, by dot, up target's up there, and we can click over price, and it shows you right there, it's called the hawk. It gives the up target, 515.93 was the up target on it, and 508 was the actual close of the bar. However, in red trend, we want to take the difference between the high and the low, in this case is a little over $3, and we want to look for a discount. And that discount would be at least a third. And often what I'll do is start trailing it from that close price. And in a 10-minute chart, you don't have to get anxious for this. It's going to work itself out, and you can just continue to follow. You can either buy at that discount immediately, or, as I like to do, wait for price to turn up. It's a little different with options. With an option, you'd probably want to literally capture it as price is declining, just because it gives you an improvement. Let me take a look at a couple of questions that we have coming in here. Okay, so Apple moved from 512 to 517 with the high shakeout. So why is it oversold? Let's go back to that daily real quick. Alright, so let me put a line on the chart. Easy, we can do that. Okay, so this is a couple of lines so we can talk about the specifics here. So 512 when Apple was down there. Oh, you want to look at the closer time frame. Okay. Got it right underneath it. Let me just expand that chart a little bit. Alright. Let me enlarge. We don't need to see price as much, so let's improve our shakeout reading. And you can see back here that when the red dot came in here, we were declining on our shakeout value. And I'll turn the color of that one. That's my blue line. I can't change that one. I have to get a new horizontal line inside of the actual indicator. That'll make it easier to point it out. Okay, so right here, we dipped to about a minus 26, and then in the next bar we had just a tiny move, and our shakeout moved up significantly. So you went from minus 26 to a minus 17. It showed you there was accumulation taking place in pretty much a flat price movement. So these guys were trying to buy up everything they could along this route, and then boom, it pops. And typically when we get a green dot or whatever, we're looking for a move to take place within 6 bars. Because at that point, it's given them enough time to accumulate what they're looking for, share-wise, and at that point, they stop letting price sort of fall back, and they, lightly pick up shares as it goes. And then what they do is they start putting in advanced bids, and then all of a sudden you see these pops. And that's usually how it takes place, where all of a sudden, things are calm, and then you boom. And that's just because what they've decided to do is that they front themselves up there, and in a way they're hoping that there isn't the supply above them that is going to sell into them when they do that. Because, this is where you see some of these large drops, where they'll front like that, and they'll get filled. And they're not expecting it. And then, price will just, plummet right back on top of them. Now, it's like I mentioned to our members last night, that in a move like this, even though it was starting to come back up, more often than not, I expect it usually to come back, try and retrace the somewhere between 3/4 down to the bottom of it before there's any improvement, because in the futures market last night when this took place, I mean, it was just a massive decline. People were not expecting it, and that's what happens when you have significant players positioned a certain way, and then something goes wrong that they weren't prepared for. And they're usually not caught off guard. They're usually pretty good about these setups, and but it's like I point out too, when the setups fail, they're not afraid to get out, and you'll usually see a much more significant decline. So you can see at the end of the day on the 10-minute, we ended up with a red dot short, which hadn't satisfied the green dot, but the trend had turned red. And it's like I tell people, fine, you didn't get your target, you still have a profit. You got to take the money. It's just there's just no two ways about it, because you've turned red trend. Now, sure, it turned green trend the following bar, but it still wouldn't change the fact that you had to have gotten out of your long setup once you got the short and move it around to go to the opposite side. Now, typically on a 10-minute chart, I don't look for that to be a daily kind of setup. I mean, it's a day trade. You need to be out before the market closes, whether it worked out or not. If you're trading a much longer time frame, and I can show you here what we have. We have our little radar screen, and we can literally just click a different time, and the chart will change to a higher time frame. So if we want 78-minute with the daily there, we can make whatever adjustment we want time-wise. And this one, we have almost all of the different stocks available. So I'll just do this a couple of little segments, and because we're running this, it takes a little bit of time to get that. So here you can see the 78-minute chart, red trend, and we ended up with the buy setup. So they were a little surprised by this move in the morning, but from our standpoint, when this came in, is that like an automatic buy? No. I always say you want to find your discount, and in this particular case, nice decline to go ahead and then get the lower time frame signals. And so it becomes a nice little bonus when you're able to capture those that way. Another one I like to look at too will be, particularly when we're looking at a 78-minute chart like this, and this actually looks fairly decent for Apple, other than that shakeout being at the -19 is still a little weak. I would have liked to have seen that somewhere in the -12 range, because then I would have pretty good likelihood that we're going to get a solid bounce from this. As it is at -19, I'm taking smaller pops from it, because you're just not going to see it. And particularly when I look at my up, down, power, down, I mean, not my up, down, but my just power momentum right here. Anytime this yellow is exceeding the cyan, that's a negative. Now, it's starting to even out, and it may flip within the next bar. Now, these are 78-minute bars, so there's not a whole lot of them in a day. There's only 5, because that breaks out to the day, perfect 5. Well, here you go. You've got nice GAM, and actually we can project that one. Well, that's looking for somewhere around the 525 to 526 range up here for its ultimate goal. And if I look at our extreme histogram, we're actually slightly above the red line, and it's interesting because you're at lower price now and actually higher extremes. So while prices dipped, it wasn't an active selling dip. And that's what I begin to look at with the shakeout rising, because it's letting me know that there isn't this huge distribution, that there's actually people picking up shares even though price is not lifted, because their time frame, I'm sorry, is not necessarily what your time frame is. And most of the time these guys are working off shares. They're not looking at option plays. What I'm going to do is see my girls off to school here real quick, and I will resume. And what we'll do is we'll just scroll through the dailies on all of the alert stocks, and then from there we can start to delve into a little bit more of the deep ones. So this was kind of just a good precursor, and we'll be back to do a little bit more later. And if you want, you can always just replay any of the discussion. This will be available on that little tab link that will give you another one. So I will be back just a little bit.